So I've recently drastically changed my gambling, I mean investing strategies, because I was looking at some income funds and found a very interesting approach to becoming financially independent or potentially retiring early. And I'm going to go ahead and break down what I found, and I'll actually go over some of my numbers for like my other retirement accounts I've never actually talked about on my channel before. So you get a more in-depth view of my risk tolerance, because I feel like my retirement is secure. It's just a matter of how early can I retire or be financially independent. So first off, I made this awesome Google Doc. I'm going to put a link on the video description below so you can use this. And basically what my plan is going to shift to is putting a majority of my account into just some income funds, with the goal being just to increase that income until it hits a level that I'm happy with, and I can just stop dripping the shares and have fun on the beach. So I decided to make a 3 fund portfolio, and I actually already bought all these positions. So when I'm going over this, like the amount of shares here is what I currently have. And what this is doing is these tables are looking at how much income is received per month and how much is dripped back into the, how many more shares are bought off that dividend. And basically what I'm doing is I'm using NUSI, JEPI, and then everyone's favorite, QYLD. Now, I love NUSI because it has more like downside protection. I know you're giving up some yield to have that. So it pays a little bit less of a yield than, say, QYLD. But QYLD is also limited in its upside and doesn't have downside protection, which is why it's paying out a higher dividend than NUSI, or higher yield. Now, what I like about QYLD and NUSI is that those can be return of capital dividends, which is not taxable income. So that's pretty cool. Okay. Now, I said I want to retire or be financially independent in 10 years, and I think that's very doable with my current setup. So let me go ahead and break this guy down. So when you're using this Google Sheet, you can change these to whatever dividend ETFs or income funds you want to do. All you basically have to do is change all the orange cells, and everything else should update. The only thing you have to do over here is you have to input your age for the first year here, in case your birthday isn't in January. But other than that, you only need to touch the orange cells. And what I did is I put in my income funds I wanted here, put in my current positions, what I'm starting with. You can change these to 0 if you're just starting off with nothing and you're just starting out. And then put in the average dividend. So for NUSI, I took the last 12 months, divided by 12, and I got 18 cents. JEPI, they only paid 11 for a year, so I divided by 11 and kind of spread that out over 12 months. And the same thing with QYLD, took the average price of the dividend for the last 12 months and put that in there. Some of these formulas will make it so it should be an underestimate of what the value would be. So like if you look at this drip calculation, the total dividend here would buy 11.95 shares. But since you can't buy a fractional share in IBKR, it's going to round down here. And then same thing with whatever you put for your monthly contribution. That's going to be split amongst the 3 positions evenly and rounded down as well. So some money's going to be siphoned out if it doesn't quite work out in terms of pricing. Oh, the other thing you have to change is there's a hidden row here. You have to change this to whatever the price of NUSI is or what you expect it to be. That's what it's looking at in order to calculate how many shares are being bought. I just have that hidden because I don't need to look at that anymore. Now, what I found looking at my stuff is I'm set up pretty good. So the current shares that I have will produce an annual income of about $12,000. And you can see as that position drips, that income is going to keep creeping up, If I work till 55, which is normal retirement, or at least it used to be normal retirement, my income at that point would be $88,000 from just these income funds if I don't add any more contributions to this. Like, how cool is that? That's more than I make in a year right now. So, I mean, here's a plan to have a safe retirement right there. But I want to see if I can retire early or at least be financially independent early. So for me, I think having 50K income from these funds would be enough for me to feel financially independent. Whether or not I retire or find something else to work or not, that's yet to be decided. But if I get to 50K, then I'll really look at my expenses, look at what health insurance would cost, or what would increase if I'm not, don't get insurance through an employer, and see if 50K would be enough. I feel like that would make you pretty self-sufficient if you have that much coming in from passive income. And 50K gets hit when I'm 49, so 15 years away. We're just only 176 months. Wow, time flies. So without adding anything more, 49, I'll be making 50K from income funds by just letting these drip and not even looking at them. Now, 49, I'd still like to be getting out a little earlier. And if you looked at my previous videos, you know that I'm fine with contributing about $1,000 a month to my account. So what happens if I just put half of that into this position? We look at this now when I go to 55, my income is now at 120,000. And if I worked even longer, you can see just how fast that compounding growth goes. If I work till 65, it jumps up to 368,000 a year. Like, I don't even know what I would do with that much money. But no, I'm not working till 65. I'm out at 55 at the latest. And that's because I also know I have retirement, pension, and all kinds of other stuff coming in. But the real question is, when does that 50K mark get hit? And if we scroll up, you can see that now comes up about 2 years earlier. What happens if I just put the whole $1,000 contribution in? The 50K jumps up to 45, which is just 10 years away. So in 10 years, I might be financially independent and could retire and not have to worry about working. Although I probably will find some kind of source of income to continue doing. And what I think is interesting about this is if I continue doing some income trading on the side from options trading, I could probably get more than $1,000 per month. And again, about every $500 you put in monthly will raise this mark like 2 years. So the reason why I'm able to contribute so much to this idea is because I already have a retirement account secure that I think is going to support me just fine. And I'm going to go ahead and show some of that stuff off. So first off, I went to a website and calculated what my current savings or my retirement accounts would grow to, assuming I stopped contributing to them. And I have $180,000 right now between all my retirement accounts, like the 401k, 457, all that stuff. And in 20 years, this is something I wouldn't touch until I'm 55. That would become $696,000. At a 4% withdrawal rate, that becomes $27,000 a year for just a 4% off of just my retirement savings that I already have set up. The other thing is I would have a pension. Now, my pension is dependent on how long I work. So if I work until I'm 55, and assuming I stay with the same employer with 1% raises, my pension would be $57,000 a year paid out monthly. So again, $85,000 a year from stuff I already have saved up. What I really just need this income fund to do is fund my final 10 years until I hit 55. Or, well, let me back up, because if I retire early, my numbers go down. The other thing I have is something called the VAC, Voluntary Additional Contributions. And this is with my pension plan. I can contribute up to 10% of my money post-tax, and it gets a 7% return annually, automatically pay this interest, which is really cool. And if I continue doing that until I'm 55, that account's going to be up to $646, and that's a lump sum that I get when I retire at 55. Now, I got this because I made another calculation that calculates all this depending on all kinds of various stuff. Well, we're not talking about that one. Now, the other thing we were looking at is if I contribute $1,000 a month, we said I could retire at 45. So what do those numbers look like when I'm 45? And I went ahead and got that as well. So my retirement accounts, again, I'm not touching that until I hit 55. So that number stays the same, $27,000 when I hit 55. My pension I don't get until I hit 55, but that's going to be only $34,000, which means that between my savings from my retirement accounts and my pension, I'll have $62,000 a year, which I know is going to be more than I need because I don't spend that much now, and I assume when you're in retirement you could be having less expenses. And then my VAC, because I'm not working as long, is only going to be $250,000. Wow, that sounds silly to say that, $250,000. And again, that's still a lump sum. So if this plan works out, I think I can retire at 45, or at least be financially independent. I'll probably still work or find something to do with my time. But this is what I'm going to transition to. Now, if you're curious what all this adds up to be right now, this is dedicating about $145,000 to these positions right now to get this kicked off. And then that leaves me with about $40,000 to continue doing my options trading with. And if you remember, I started with $60,000 in option or my options account, and I turned it into 205. Well, it's now 185,000. So 40K is fine. And I think with margin, I can keep my notional value to 1.5 times that account size, because I can always sell these shares if I get in trouble. So I'll be playing with about 60K again, which is just like me starting over. And if you look at my income back when I had 60K, and if you go back in time and look at how much money I was generating off that 60K from options a month when I was just starting out learning with options, like 2020 April, I made $1,000 off that 60K. And I consistently made at least $1,000, and that was with a small account. So I'll be starting with 60K again, and the money I make from that is just gonna go straight back into like these funds too. So $1,000 into those positions might be an underestimate when all things are said and done, because I'll continue playing with options. But I think that's going to force me to be more safe with my option plays, which is why I think transitioning to this plan is going to help me. Another thing I'm thinking about is another version of this plan that I think will get me there quicker, but it involves more risk. I'm currently researching, so there may be a video coming out later about my findings on that slight variation of this plan. But so that's my plan, to be financially independent in 10 years. Whether or not I'm retiring early, undecided. But we got 10 years until I get there, so that's a problem for a future me to figure out. And then you also now know what my retirement looks like, depending on different factors. So you know that if I was to blow up this entire account, like, I know my retirement, old me, is still gonna be just fine. It's just a matter of current me maybe eating ramen noodles until I'm 55. And if you like this spreadsheet, go ahead and go to this video. You can get my options tracking spreadsheet here. And a lot of people find it useful. You're allowed to log multi-leg trades in one row and show you your P&L, so you can look at your history and reflect on your trades pretty easily. I hope you guys had a great start of the year trading. I know the market's been very kind to me despite my Wall Street bets outbreak. See you guys